Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has been hit in all directions as the new week kicks off into mayhem after yesterday's down challenge rejects the broad uptrend seen at 68 figure 35. It is from the rejection is that the market is now whipsawed into today's session after falling from the highs of 69.34 to a low of 68.57. And that was all on the back of this morning's announcement from White House trade advisor Peter Navarro after he told news sources that the US trade deal with China was over. And then in minutes later, the economic advisor Larry Kudlow disputed comments from Trump's advisor Navarro saying that the US and China trade deal has not fallen apart. Following that, President Trump also chimed in and said that the trade deal is fully intact. So therefore, the market was, as you can see from the 1 hour price action, very, very whipsawed here. And no doubt the market will continue into that phase of patterns as we go into this week. Now, from what I can ascertain is that the renewed upside test should continue to foul towards the region of 69.25 or around 69.65.75. And therefore, if we do get a challenge to the downside, we do need to see a break of this 68 level. If seen, would reinstate the downside towards a target of 64 to 66 cents. The euro also went into a whipsaw price action, but overall, I still feel that we are looking towards a target of 111.1015 after the end of last week. The bullishness in the US dollar did return. Although there's a little bit of lack of evidence to support any renewed upside tests, but I do feel towards either 112.80 or 113.50 as a short-term cap, and overall the bears should continue to test lower. The dollar yen also goes into a whipsaw fashion after 4 days bearishness, is the market's now looking for a possible short squeeze due to today's incident of news events. Now, if we look towards 147.45 to around 147.90, you should find good supply. And therefore, I expect to see a move back towards 106.70 or around 106 figure 40. The pound has also been very choppy and now back towards the top side of the range, seen roughly around 125, which was the cap this morning. I do anticipate the market should fail towards that level and eventually see the bulls failing to restore the bullish sentiment and look back towards the downside, which comes in somewhere around the close of 123. The dollar CAD took a slight step away from 136 and now looks towards the downside support level, seen around 134.90 figure. However, from the technical implications, I still feel the bulls are still very much likely to take the challenge towards the top side, and if we break above that level around 136.25, should lead on to around 136.65. The gold hits the highs around 1,760, which was close to the previous high, or the 8-year highs, and therefore the market is staged as minor pullback. Do be on your guard and keep your stop losses accordingly to your risk management in case we see, like last time, the market plummeted from these 8-year highs and back towards 1,700, and then beneath that was 1,670. So I do feel there is a little bit of uncertainty at these highs, but there is enough comments from either from the US or even with the risk of the coronavirus cases increasing, may see one more challenge to that top side, but again, most probably will struggle to uphold. The challenge towards the top side is still holding just around that $41 cap, I thought, for the West Texas oil. Now, I feel that as long as we don't get a break and a close above there in New York, then I do anticipate a pullback and therefore look towards the bottom side of the range around 39 or down to 36. If we do get a break above 41, that would completely negate any pullback and instead put the targets of around 42 to 44 back in perspective. Well, that's a wrap for today. Thank you very much for joining me. And as always, look out for the intraday report. Now enjoy the great start to this day.